Our next speaker is someone that should be familiar to all of you who attended our conference. That's Professor Nick Tideman of Virginia Tech. Nick has been to each of our conferences since 2005.
Yes.
And that is greatly appreciated, seriously. And, wow, okay. Nick is one of the most dedicated educators that I know of. He always attempts to teach and to help one learn, and he has always steered us correctly, except for that one incident when you introduced me to Michael Hudson. Other than that, it's a solid record. I had to say it, I'm sorry. Getting silly. But his talk today, Nick actually introduced me to a fellow by the name of
Robert DeFemery.
Back there.
Robert DeFemery.
Pardon?
Robert DeFemery.
Robert DeFemery. And this was at the American Institute for Economic Research, which is a large foundation in Great Barrington, Massachusetts. You may have heard about it. And we were both up there. I was there. I had been a trustee of that organization in 1976 when they were under threat by the SEC to be put under. And we went in and rescued them. And so, later, after I'd finished my research at the main library in New York, I was up there at the Institute using all of their library, and Mason Gaffney, who was one of the leading Georgists, was holding his annual conference there, and Nick was there as a member, only 14, 15 people, including one fellow who later got the Nobel Prize in economics, and his name was?
William Vickrey.
William Vickrey. And Nick got me in to that meeting, which was really quite an honor, and introduced me to Robert DeFemery, who then helped us immensely in defining the nature of money, which has been a critical part of what we're doing. So, again, thank you for that, Nick, and welcome, and have at it.
Yeah. Yes, I was all for 100% reserve banking. I was all for 100% reserve banking at the age of 15 because Bob DeFemery was a friend of my father's, so I was familiar with his writings then. I got a PhD in economics at the University of Chicago, where I studied under Milton Friedman. But I'm not really a monetary expert. I deal mainly in other things, but I've always had an interest in money. So you shouldn't regard yourself as getting a talk from a true monetary expert. I'm a monetary journeyman and an expert in voting theory and public finance and things like that. I have a suspicion that the title of my talk is leftover from last year, as with John Bongiovanni's. But I'm sure that the things that I'll be saying today will be rather different, just because with every passing year, one looks at things somewhat differently. Anyway, I saw this title, and I thought to myself, an interesting way to approach this would be to ask, what are the principles that organize reform in various areas? And first thing I came up with, being an economist, is that institutions should be efficient. Secondly, valuable things that no one made should be shared equally. No privilege. In other years, I've talked about how the word privilege comes from Latin for private law. A private law is a law that has somebody's name in it, lets one person do what other people are not allowed to do. That's why my father used to say that no one could possibly be underprivileged, because the right amount of privilege for everybody is 0. Institutions shouldn't be misleading. People who benefit from inefficient or unjust institutions should not be compensated when we reform those institutions. No deference to privilege. These are the principles that I bring to my analysis of money, banking, land, climate, and sustainability. So, beginning with money. Why not commodity money? As you know, there are gold bugs. Gold is the most bizarre thing to try to have as money because its value fluctuates so much. Those of you who have been here if any of you were here in 2005, you will have heard my talk explaining why if you did want commodity money, you'd want it based on bricks, because bricks have a higher correlation with the overall price level than any other commodity you can find. So if you want a commodity money, it should be bricks, but I don't recommend bricks or any other commodity for reasons of efficiency. Fiat money, if you can manage it, is so wonderful because here's this source of value that you could get just by turning the printing press. Why should you have to go to the trouble of digging gold out of the ground or making bricks or doing anything else to support your money when you can do it just by paper? So fiat money can be dangerous, but I think that we know how to deal with those dangers. And if you ever think that the dangers of fiat money are too much, I recommend bricks. Now, here's a point where I disagree probably with most of the people in the room. So I hope you'll listen to me and then think through whether you want to stick with your present views or adopt mine. It seems to me that the best way to create money is by interest-free loans to everybody. I've developed a new name for this idea that I didn't have last year. I think about the idea last year. Now I'm calling it helicopter loans. There's this idea of helicopter money around where you just drop money on people and it's theirs. Well, I want to drop money on people and say, you might have to pay it back, and at least you should pay it back when you die. And one reason for this is that I want to have a system where you can withdraw money from the system if you need to without taxing people. Just say it's time to pay back some of those loans. And another reason is that I would like to have a system where every time somebody turns 18, we can give him his share of the money supply like everybody else got. In order to do that, we have to expect people when they die to pay back the money that was lent to them. But I think that I could go on that idea for 20 minutes or so, but I don't think I will, because there are other things that are worth doing in terms of the title I have today. Shared equally. So we should have institutions that are not misleading, and people think that the money they put in the banks is in the banks, and they think that banks don't create money. And it seems to me that it would be good to have a set of institutions where people are not misled. And so I think that if we say the way you get money is the Fed prints it or creates it electronically and sends it to your bank for your use, would be a much more straightforward system that people could understand. Non-compensation of the people who currently benefit from the inefficient system. Bank profits arise because of the system that we have now. If we were to reform the system, bank profits would fall significantly. I don't have any sympathy for them, but it does make it hard to proceed. Sinclair Lewis has a famous quote, "It's hard to get a man to understand something when his salary depends on his not understanding it. It's even harder for a man to understand something when his millions of dollars depend on it, of wealth." So enough for money for the moment. Let's move on to banking. There's an interesting question that's come up several times in this conference as to whether money and banking are inherently integrated or can be separated. I think that there are lots of synergies of putting monetary reform and banking reform together, and yet I think you could do them separately. You could have a monetary system that worked the way I described, where you created money by having the Fed make loans, or finance loans that people would get through their bank, all citizens, or all citizens who have bank accounts and pay their taxes. Monetary reform and banking reform do go together. And I think that I'm pretty much on board with everything that people in this room generally want with respect to banking reform. The inefficiency of the banking system, as I see it, arises through deposit insurance. If we didn't have deposit insurance, we'd have bank runs, that would be even more efficient. But when we have deposit insurance, we have the inefficiency that arises because, as we heard yesterday, there are, perhaps it was at a meal that I heard this, I can't remember for sure. There are savings and loan associations that deposit $245,000 in banks, not caring if they fold the next week because the deposits are insured. We get a lot of inefficient lack of care by banks as to whether they're being careful about who they lend to because we have deposit insurance. And so I think we have to end deposit insurance, but if we did only that, we'd be in trouble, so we have to do some other things to make it work. The element of equality with respect to banking comes in the fact that in order to start a bank, you have to get a bank charter generally. And the difficulty of starting a bank is rather extreme. I would like to have a system where anybody wanted to could open a bank rather simply. And so that there wouldn't be any element of privilege, that some people get to be bankers and other people don't. The lending of deposits is misleading. And also, if you could do away with the ending of deposits, you wouldn't need deposit insurance. So there we go back to 100% reserve banking. I like the version of it that says you go to the bank, then your banker with the deposit, money to deposit, and the bank says, what do you want to do? You want to store it in the vault, or do you want to invest it? If you store it in the vault, it stays in the vault, and you pay service charges for transferring the money around, but they're probably not very great because it's really pretty easy to transfer money around electronically these days. If you want to invest it, the banker will be the agent for any number of mutual funds, and you can decide what kind of mutual fund you want to put your money in. Do you want to put it into car loans or credit card loans or home mortgages or small business loans, or some combination of all of the above? You can divide your money among funds or find a mixed funds. The banker will help you decide how you want to invest. Now, one of the things that I'm implying here that goes against somebody else's ideas that you heard is that I don't think we ought to deceive people into thinking that there's such a thing as a risk-free investment. If you invest in government bonds, there's some chance that when you want to sell them, they won't be worth as much because the interest rate has gone up. With other people, there's always a risk that they won't pay. If you invest in real capital yourself, it might turn out that there isn't any market for what you put the money into. There just isn't any such thing as a risk-free investment, and we shouldn't perpetuate the myth that there is such a thing out of concern for the poor widows who are looking for a little bit of return on their money. The world doesn't work that way, and it creates additional unjustified risk if you try to create a risk-free return for some people. You can get the risk down awfully far with something like a money market fund, but it doesn't go to zero, and that's just the way things are. Bank profits will suffer if we have banking reform, and that's just too bad. I realize that it makes it very difficult politically. It gives you opposition that has an incentive to mislead people with respect to the arguments you're making. But it's the fight we have to fight. In preparing for this talk, I was thinking, when was the last time that a powerful interest was overcome by political action? And the last case that I could remember was about 1980, when we got, all of a sudden, when economists didn't expect it, deregulation of trucking and the airlines. That was something that economists have been talking about for decades. We thought we would never get it, but we would always tell our students how there ought to be deregulation of trucking and the airlines. Then somebody explained it to Ted Kennedy. And he said, yeah, that's a good idea, and he made it happen. So we just have to keep working on it. I worked for a year as a senior staff economist at the President's Council of Economic Advisors. And the person who I reported to was Hank Hautacher, a prominent Harvard economist, and he gave us a little talk when he was going back to Harvard, in which he said that he thought that politicians paid attention to what economists said about 10% of the time. But we never knew which 10% it would be, and it was valuable enough when they did pay attention to us that it made sense for us to keep on trying. So I am glad there are people who are trying in all sorts of ways. I hope there is success. Now, I'm concerned with land as well as money and banking. The same issues of reform arise, but there's also an interesting additional connection between land and money and banking, and that is that a lot of bank loans go to finance land. And my proposal with respect to land is that we ought to regard land as everyone's common heritage, and people who have title to land should be expected to pay on an annual basis for the value of that privilege, that exclusive opportunity. If the selling price of land went to zero, everybody who was expecting to collect the rent of land would experience a drop in wealth. It would be a transfer of wealth from people who are alive today to those who haven't been born yet. And it's hard to get the vote of those who haven't been born yet to do this politically, so you have to count on people understanding the need for this out of a matter of goodwill, a matter of what's just. Anyway, with respect to efficiency, the point that is on the board is only one of a couple important points. If you look around any big city, you'll see very tall buildings, and near them a lot of 1- and 2-story buildings and some surface level parking lots. That's terribly inefficient, and it happens because of the phenomenon that there are people who think that if only they hang on long enough, the land will be worth a lot more than people realize it's worth today. And in that process, people generally hang on to things too much. It's a phenomenon that economists in another context have called the winner's curse. If you auction something off, it goes to the highest bidder. The highest bidder is the one who's made the stupidest overvaluation of it. So similarly, land gets into the hands of people who have the most bizarre ideas about how rapidly it will rise in value and therefore how important it is not to use it now, leading to an artificial scarcity of land. There's also the fact that a tax on land is one of the few sources of public revenue that doesn't harm economic incentives. The land goes on producing whether you tax it or not. At least if you're put in the hands of somebody who the land doesn't leave town or decline to work when you tax it. Whereas when you tax other things, you generally diminish economic incentives. The other principal source of public revenue that doesn't harm economic incentives is taxes on harms themselves. The taxes on pollution or taxes on driving on congested streets, like the London congestion charge. Anyway, taxes on collecting public revenue from land is efficient. Some people don't even like to call it a land tax because it's merely a fee for the exclusive use of what ought to be regarded as our common heritage. The sharing equally doesn't quite involve equal sharing with everybody, because when you put in a transit system or a set of roads or a sewer system or something like that, you raise the value of land. The value of land that arises from infrastructure ought to be collected and used to finance that infrastructure. But there's also a component of land that is of land rent that is due to nature. And what justice requires for that is that it be shared equally on a worldwide basis. Land is widely understood, widely misunderstood. A lot of economists think there are two factors of production, labor and capital, and land is another form of capital. But capital is made by human effort and land is not. Capital depreciates, land generally rises in value, although there is a possibility with something like the productivity of farmland, of depreciating land. So it would be nice to have a set of public finance institutions that recognize the distinction between land and capital. If you were to collect the rent of land publicly and eliminate or reduce taxes of other sorts, anybody who's expecting to collect the rent of land will suffer. That includes the title holders of the land and the people who have lent money on land. I have a novel idea, actually, I got it from Michael Hudson, with respect to what you do about the fact that banks could all go under if you took the land rent and collected it publicly so that it wasn't available to pay the mortgages. It seems to me that we ought to just regard the banks as a financial intermediary. They're not collecting the rent themselves, they're collecting it on behalf of the various people who have lent them money. And so if I could write the legislation that would implement a land tax, I would say that where somebody has a mortgage on his property that is greater than the value of the improvements, the mortgage payment with respect to the repayment of the principal that's greater than the value of the improvements should be payable with the receipts for having paid the land tax. So we're going to charge a land tax to the person who was planning to collect the rent in the form of mortgage payments. We're not going to collect it from the title holder. He wasn't planning to collect the rent anyway. He was planning to pass it on to someone who lent him the money to buy the land. So that's an interesting way of dealing with a an overnight implementation of a tax on land without causing banks to go bankrupt. Then I want to say a bit about climate change. Climate, in a sense, is another form of land. It's a natural thing that we use, and some of us use more than others. And the economist's approach is my approach is the one that the preponderance of economists favor, and that is a carbon tax. It's not actually just a carbon tax. It's a tax on any activity that causes harmful climate change, and the carbon tax is the main one, but you might want to have a methane tax and a tax on chlorofluorocarbons and various other obscure gases that have greenhouse gas effects. Some people think that we should pass out permits for emitting carbon dioxide and make them tradable. There are two problems with that. One is that the plan is usually to pass them out for free to whoever has been emitting the carbon dioxide, and that's unjust. It's taking the people who have been causing harm and saying, well, because you're causing harm and we can't let other people do it, you can do it, and you don't have to pay. That just doesn't make any sense to me. The other thing is that the amount of carbon emitted tends to fluctuate. And if you ask what is the efficient price is constant, whether the quantity is up or down. The harm happens over many years. It's not as if the harm goes down when the quantity goes down this year and the harm goes up next year, then when the quantity goes back up again. It's just a much harder control problem to try to make the quantity of permits go up and down so that the price in the market stays constant. It makes much more sense to just try to figure out what the right price is and leave the price there in order to achieve efficient control. Now, I wonder what I haven't. So, I think that there's the misleading element arises from the people who say, well, not all the scientists agree about climate change. And if you have about 98.5% of the scientists who say that we have a problem with climate change, it's probably worth doing something about it. It's imaginable that the 1.5% are right. Sometimes they are. But another thing that I propose to deal with this disagreement is to have a futures market. That is to have the price. Here's my proposed mechanism for setting the price of carbon dioxide. Estimates of the efficient price range from $5 to $95 a ton. The average is about $12 or so, or the median. I think that anybody who wants to emit carbon dioxide should put up a deposit of $95 a ton, the upper limit of the scientifically respectable estimates of what the cost is. And we say, we expect that the scientific consensus as to what the right price is likely to converge over the next few decades. And we have 30-year government bonds. So you have to put, if you want to emit a ton of carbon dioxide, you have to put $95 into a zero coupon government bond, a government bond that has been stripped of its interest, so there's no interest to be paid for the next 30 years. And in 30 years, we will hold a academic conference of the best climate scientists and have them discuss the question for a week, after which the 21 best climate scientists of the world, as voted on by their peers, will each suggest what the price of emitting carbon dioxide should have been in the year 2016, and we'll take the median, the middle of those, and say that's what the price will be, and everybody who emitted gets their change with interest. Well, nobody who's in the business of producing something and emitting carbon dioxide wants to invest in zero coupon government bonds of unknown value for the next 30 years. So of course there's going to be a market for these bonds. Someone who thinks that the right price is $50 will be willing to pay $45 for a bond that will pay that he expects to pay $45 in 30 years plus interest. So the market for these bonds will determine what it actually costs to emit. If the market thinks the right price is $50, you pay $95, you sell the bond, you get your $45 back, and it costs you $50 to emit a ton of carbon dioxide. So that's the way that I would propose that we take account of the harm of carbon dioxide. And the general principle applies to anything that we have reason to believe creates a public harm. And I think that the efficient thing to do is to have a uniform price for carbon dioxide across the globe, because it does the same harm no matter where it's emitted, and to share the proceeds among countries in proportion to their population, on the theory that the atmosphere belongs to all of us, and if some people get to use it and not others, we ought to receive that compensation equally around the globe. Coal mine owners will suffer. We ought to have closed the coal mines down a long time ago, I suspect. I have some sympathy for the coal miners themselves. Perhaps we want to have some transition compensation for them. But I hope we never pay the owners of the coal themselves for the harm they suffer, because we make the coal worthless by requiring those who burn it to pay the social cost. Sustainability. So we are, one example of a problem with sustainability is overfishing, destroying stocks of fish. The economic solution is tax on how many fish you take out of the ocean. Who gets the tax? Shared equally on a global basis. The fish belong to all of us. So what we do instead is we make a few boat owners rich by passing the permits out to them. Disgusting. Fishermen will suffer. They can find other jobs. Now there are some, I know the whale's not a fish, but there are some ocean creatures that we wouldn't want to put a price on, I think. People differ about this. People in Norway and Japan and Eskimos think that whales are tasty treats rather than cuddly cousins. Whales are everybody's common heritage. The only way that I can decide what we ought to, the way that I can think of that seems to make the most sense to decide what we sell and what we preserve is to do it democratically, globally. If more than half the world says that we ought to protect the whales, then we ought to protect the whales and not sell them at any price. If 51% say, well, let's sell them for $10,000 a piece or whatever, I'll disagree, but I'd have to say that we just can't save everything, and it's hard to know what we ought to save. The best thing I can think of doing is to decide by majority rule. Those are my thoughts. Thank you.
Okay, any questions for Professor Tideman, please? Steve, have you got the mic? Thanks.
That one, well, oh, there's one coming.
Well, I guess the question is fairness. For example, the fish example. Some countries have no ocean front.
Yes.
Others have more than others. For example,
Right.
Florida has more coastline
Yep.
than Rhode Island. So how does one allocate that?
Well, what you do is you equalize around the world in terms of the rental value of land per capita. If you have more than your share, you will compensate.
Some people around, everybody, the world is not a perfect information system.
Yes.
And I think your point you made earlier about the bid winner being the loser is an excellent example in kind of a reverse efficient market theory.
Yes. There's bound to be some errors, but to the extent that we do collect revenue for exclusive access to opportunities that nobody made, we all have equal rights to that revenue. And we know pretty much how many people there are, so we know what one person's share is. So we know what it means for a region to have more than its share. Even if you have more than your share, you owe to those who have less than their share.
Some fishermen are far more efficient than others. For example, those who can afford Kevlar nets are more efficient than those that are fishing with old-fashioned nets.
Yes. And so I don't want to subsidize people who to continue to do something inefficiently. I might possibly feel some compassion for them and want to teach them some other activity. Like, well, a variation on that theme is we had too many farmers in this country for many generations because we couldn't stand the thought of telling the people that the efficient size of a farm is now 10,000 acres, we don't need as many farms. But so we should exercise our compassion in terms of providing transition assistance. And in the case of the fish you were talking about, the price should be the same for everybody who takes a fish out of the ocean. You shouldn't get a lower price because you do it stupidly or inefficiently because you can't get access to capital. You should find something else where you have a comparative advantage.
But the world doesn't work that way. In the long run, we're all dead.
Well, but okay, I think we've exchanged it sufficiently. Elizabeth has a question.
Wow, that was really scary. Efficiency as being something that we should actually be appreciating. I think the idea to me about taking extra amounts of fish out using larger nets is probably not discussion for this conference, but we really need to be shifting our consciousness. We need to be having more and more people working the land and not looking at efficiency on the scale of 10,000 acres, but okay, whatever. I'm really interested in your land tax section, and I wondered if you could go into it in a little more detail. I work primarily in food and agriculture policy, and one of the things that I'm particularly keen to do is to try to encourage more land to be saved and less of it to be developed, because we are building on all of our prime farmers at the moment. And taxation is actually one of the key pressures in causing that trend to happen, as landowners are really trying to squeeze money out of the small acreages that they have in order to pay taxes before they can do anything else.
Well, when squeezing extra revenue from land involves making the land less productive in the future, that's sort of in the same category with harvesting fish. It's destroying future opportunities and you ought to pay for it. But I think that there's such a thing as preserving too much land. Suppose that in every generation 1% of the people preserve their land. After 50 generations, you might have 3/4 of the land preserved. After another 50 generations, you'd have 98% of the land preserved. We can't afford to keep preserving more and more land. We can't let the past generations determine what we're going to do with the land ourselves. I disagree with the idea of this generation being able to decide that no generation in the future should ever be able to use a particular piece of land no matter what the conditions are. That just doesn't make any sense to me. Now, it does make sense that we want to set some land aside and not use it. But I think we should understand that to be a decision that is made by each generation, taking account as best it can of the costs and benefits. So I
wasn't speaking so much on easements as I was on just the general trend of building strip malls all over our prime farmlands and the pressure to develop as opposed to actually respect the land for the value that it is and its integrity, either as wild land or as food production.
Well, okay, I endorse the idea of taking account of the external harms and the external benefits. If land provides services of the future by increasing future productivity by being left idle, left fallow, or if it provides services in the form of view, these things deserve to be taken into account in terms of the incentives we give people with respect to how they use land. And if certain uses of land are widely perceived as ugly or casting harmful shadows or causing congestion, all of that deserves to be counted and charged for. So I think it's important to have a conversation as to what the magnitudes of the benefits and the harms are, and to find a system for seeing that they are taken into account in the decisions that are made.
I guess I would like to see some cultural exceptions in this plan. For instance, whales. Some cultures depend on it, like Eskimo. If you go out in a kayak to catch a whale, I say, yeah, go ahead. You know, if you're going to use a ship and big, high-powered harpoons, or you should be out of business. But right now, in the Kalahari, I believe, or somewhere down there where they're preserving land for public, for game and stuff like that, they're now shooting bushmen because they're taking game out of their thing. And I'm thinking, no, they should be part of the preserve. They're part of the ecosystem that's there.
That's like shooting lions because they're taking the water buffalo or whatever. Exactly. Yes. Yes, we do have to be culturally sensitive, and I understand the difference between an Eskimo who wants to go out in a kayak, although if the Eskimo wants to go out in his kayak and take his rifle with him, that's a little bit different too. We need to have some kind of participatory process in these things that treats them as our common heritage and also allows us to make sensitive decisions in all dimensions of sensitivity. But sometimes it's sufficient to just put a price. I mean, with respect to cod, we probably don't have too many sensitivities, and it's just a matter of getting the price right.
The price is not, the price right in something like cod is not what it is in the supermarket. For example,
of course.
For example, your talk about fishing with harpoons and rifles. When people were fishing with harpoons, there were a lot more sea creatures to fish. And, this whole argument often doesn't take into account the dynamics of the...
And we should, I agree. We should. It's important to take account of all the consequences, including their dynamics. Yeah. And we can only do it imperfectly, but we have to try the best we can.
Okay, we have a question here, Greg Coleridge.
I'm wondering if in addition to being culturally sensitive, we also need to be species sensitive. By that, if we believe this notion of sustainability is very important and that humans are dependent on the world around us, then when it comes to the question of taking out whales, to what extent should whales have a voice in that decision making? It's hard to quantify or the like, but I would imagine that in general, they would not necessarily want to be slaughtered in mass. So to what extent, and there is this growing movement around the world to affirm what is being called the constitutional rights of nature.
Yeah.
And so how does that fit into this notion? And maybe instead of a simple 51% of human species vote to take into account whales, for the most part, I would think not wanting to be exterminated. You might want to have 60, 70 supermajority.
Yeah, well, I'm not sure that cod aren't also concerned about their survival. I don't know how to draw the lines. Now, I think I feel as you feel that that whales are my close cousins, and I like the idea of protecting them, and I'm not so concerned about protecting the cod. But I'm looking for a way of dealing with this that doesn't say, I'm right and you're wrong, and so we have to do it my way. Now, it would be nice if we knew more about the consciousness of whales. They do seem to have a consciousness that's closer to our own than lots of other creatures. And I hope that weighs significantly on people when they try to decide what the status of whales should be.
Hi. Now, you probably read the book Equality and Efficiency by Arthur Oaken.
Actually, I haven't.
The big trade-off there.
Yeah, I'm aware of the idea of the trade-off. Yeah.
And of course, they would talk about taxing the rich to give more to the poor. And in this sense, you're taxing to provide more for the sustainability. Is that what I'm hearing?
I'm saying that we should tax to take account of the harm that people do by the choices that they make. So I'm equally concerned to tax people for causing congestion on city streets. But sustainability is something that a lot of people care about for very good reasons, and so it generates a reason for taxation. But sustainability is only one of many economic concerns that I have.
You speak of carbon tax as a way, as a tool. Is it possible to address the carbon pollution from another angle other than an economic one, since that could become the idea of taxing on carbon could get kind of complicated after a while?
Well, I guess another approach that some people take is what economists call the command and control approach. That is to say, to factories you have to burn gas and not coal. They say to house builders you have to put so much insulation on the house, and this, that, and the other throughout the economy in order to reduce carbon. Economists tend to feel that the controllers can never do a very good job of that, and we get a lot more of what we want by concentrating on the kind of tool that is broadest in the incentives that it generates. I'm not sure that helps answer your question. I guess there's another approach you might call a communal approach, where you ask people to become sensitive and just organize their lives in such a way as to not put such a stress on the system. And if we were all sufficiently sensitive, we wouldn't need economics. We need economics because we haven't learned to be sufficiently sensitive to properly take account of the consequences of our actions when we don't have to pay prices for them.
Thanks, Professor Tideman. We'll have to cut it off